Late-night closing calls between Kenya Airways, its key stakeholders and lawyers saw the culmination of a deal that is intended to secure KQ's future after 11 banks signed an agreement to acquire 38.1% of the airline, trading off 17.2 billion shillings owed in debt out of the 22.5 billion shillings to equity. A deal that this morning saw the Nairobi Securities Exchange halt the trading of Kenya Airways shares for 2 weeks to facilitate share split and consolidation of the ongoing process. KQ shares were diluted from 5 to 1, splitting 1.4 billion shares amongst previous shareholders. However, with the new debt rationalization deal, the airline is realigning itself to acquire new shareholders. According to a statement, an open offer of new shares is intended at a later date to enable shareholders to reinvest in the airline post-restructuring. To get to this stage, however, was not a walk in the park.
Always, when you're negotiating with people, you don't always necessarily get what it is you set out to, but bringing them back towards where we wanted them to be. That whole complexity of negotiations was the most difficult part, I would say. This is why we said it's better to go long to get there than to try and rush things, and we took our time.
Government earlier on in the week signed an agreement converting 27 billion shillings owed by KQ into equity, taking up an additional 19.1%, increasing its stake to 48.9%.
The support given by the government is no way a government bailout. The government expects a return on its investment once the airline returns to profitability.
KLM Royal Dutch Airlines shareholding has reduced to 7.8%, while individual shareholders account for 5.2%. On the KQ board, the government will have 3 members, while the KQ Lenders Company will be represented by 2 members. Mombi Warue, JKL.